Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 13th March 2026. Foodtech giant Eternal has invested Rs 450 crore or around $50 million in its quick commerce subsidiary Blinkit through a rights issue. This is the first capital infusion into Blinkit in 2026 after the company received Rs 2,600 crore from Eternal in 2025. The latest infusion follows a series of capital injections by Eternal into Blinkit last year. The parent company invested Rs 500 crore in January 2025, followed by Rs 1,500 crore in February and Rs 600 crore in November, taking the total investment in 2025 to Rs 2,600 crore. The move also comes amid rising competition in the quick commerce space. Zepto raised $450 million in October last year in a round led by US-based pension fund California Public Employees Retirement System. Swiggy's board also mopped up Rs 10,000 crore to public or private offerings to ramp up its quick commerce play. The Indian rupee hit a new lifetime low against the US dollar on Thursday, driven by surging oil prices due to energy supply disruptions. This economic risk for energy importers saw the rupee fall to 92.3575 per dollar. Central bank intervention helped to curb further losses. India is set to launch a massive 1 trillion rupees fund to boost domestic chip making, aiming to become a global manufacturing hub. This initiative will offer subsidies for chip design, manufacturing equipment and supply chain development, building on existing programs that have attracted major players like Micron and Tata Group. The ambitious plan seeks to elevate India's semiconductor capabilities by 2032. The Reserve Bank of India or RBI has issued amendment directions clarifying the computation of owned fund or Tier 1 capital for non-banking financial companies or NBFCs and asset reconstruction companies or ARCs in relation to credit and investment concentration norms. The amendment provides clarity on how owned fund or Tier 1 capital should be computed for the purpose of applying credit and investment concentration norms. This capital base is used to determine the permissible exposure limits that NBFCs and ARCs can maintain with respect to borrowers, groups of borrowers, or investment exposures. The Reserve Bank of India or RBI has issued amendment directions revising the counterparty credit risk or CCR framework relating to the computation of potential future exposure or PFE under the current exposure method or CEM. The revised directions clarify that banks acting as clearing members in the equity and commodity derivative segments of SEBI-recognized stock exchanges must maintain an appropriate capital charge for counter credit risk or CCR. This requirement ensures that banks adequately account for credit exposure arising from derivative transactions cleared through stock exchanges. The amendment revises the add-on factors used for computing potential future exposure or PFE under the current exposure method. These add-on factors represent the potential increase in exposure arising from market movements in derivative contracts. The revised directions aim to ensure that banks maintain adequate capital buffers against the derivative exposures, particularly where they act as clearing members in exchange-traded derivative markets. The alignment with international standards further promotes sound risk management practices in the banking system. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.